Okay, you are welcome to First Big Forex Academy. This is stage 2, the intermediate class. We are done with the basics. So this is the intermediate class. And in this particular stage of our training, we would be looking at different concepts. And these concepts include what is a PEEP, concept of bid and ask price, what is a spread, forms of trading orders, concept of take profit and stop loss, leverage, lot size, risk management, common mistakes by traders, and then trading plan. So these are the things we are going to be discussing in this intermediate class. So quickly, let's start with what is a PEEP. What is a PEEP in Forex trading? What is a PEEP in Forex trading? As a Forex trader, you will be hearing of PEEP. You'll be talking about PEEP a lot of time, okay? Now, a PEEP is a measurement of movement in Forex trading. A PEEP is a measurement of movement in Forex trading used to define the change in value between two currencies. The literal meaning of PEEP is percentage in profit, and it is the smallest standardized move that a currency quote can change by. PEEPs are used by traders to calculate the spread between the bid and the ask prices of the currency pair and express the profit or loss that their position has made. So what we are saying is that PEEP is actually the smallest unit of change. Price of a particular currency pair can undergo. That slightest change is what we call a PEEP, and the full meaning of PEEP is percentage in profit. Now, when you take a look at this, here we have understanding bid, ask, spread. Now, of course, I already talked about bid, ask, and spread during our basics, right? But I'm still going to talk about it here. Now, we have bid, the price a buyer is willing to pay for a stock of an asset. And of course, ask is the price a seller is willing to sell their shares, right? The difference between the bid and the ask price is called the spread. So ask minus bid equals spread. If you open your MT5, you would notice that there are usually two numbers attached to every currency pair right there on your MT5. So we have a Euro USD 1.3272, Euro USD 1.3276. Okay, the first one is the bid price, the second one is the ask price. You can see that the difference between the bid and the ask price is very, very small. Okay, it's usually at the last digit number there, which is for the bid we have 2, for the ask price we have 6. Okay, so it's just a very slight difference, very slight difference. Now let's take a look at this. We have Euro USD 1.1524, which is the bid price. Then we have in USD, we have a 1.1527, which is the ask price. So you can see that this Euro USD, there are two numbers that are associated with Euro USD. Of course, I already told you that in a currency pair, the first currency there is the base currency, and the second currency is the quote currency. So we have Euro USD. Euro is the base currency, USD is the quote currency. Of course, we know that spread is always ask minus bid. So in this particular example now, we can see that spread equals 1.1527 minus 1.1524, which is equal to what? 2 pips. The second example, which is a Euro GBP. Euro GBP, Euro is the base currency, GBP is the counter currency. Remember, I told you that quote currency is also called counter currency. So here, euro is the base currency, GBP is the counter currency. Of course, we know that spread is usually ask minus bid. So in this case now, you can see that our ask price is 1.1039 and our bid price is 1.1037. So when you subtract that, we also get them 2 pips. Now this image was extracted from the MT5. Okay, now I see from the image above, Euro USD 1.1763, 1.1764. Of course, 1.1763 is the bid, while 1.1764 is the ask price. Spread is always ask minus bid, which is 1.1764 minus 1.1763 equals this. So here the bid, the PIP here, which is also the spread, is 0.001, right? In this case. Now let's talk about Forex market orders. Forex market orders. Now, what do you mean by market order? Market order means trade executions. How you open, adjust, or close a trade. Forex market orders. Market order means trade executions. How you open, adjust, or close a trade. How you open, adjust, or close a trade. That's what we mean by market order. Basically, we have 2 types of these orders. As a trader, there are 2 types of orders you can make use of in Forex trading. We have what we call instant order or market order, or you can still call it market execution. Then we have the second one, pending orders. So we have 2 types of market orders, instant order or market order. Then we have pending order. These are the 2 types of trade orders we have. Let's take a look at each of them. What is instant order or market execution? Instant order is an order to buy or sell at the best available price. Instant order is an order to buy or sell at the best available price. Let me use a very simple analogy to explain this. You walk into a phone shop. You walk into a phone shop, and let's say you want to buy a Samsung phone. As you just walk into the phone, and they tell you that the price of the Samsung phone is 200,000 naira, right? So you just open your bank app and transfer 200,000 naira to the seller, and you take your phone home. You bought the phone at the current order of that current price of that phone. You bought that phone at the best available price of that phone. That is the price of that phone, and that was the price you paid. You understand? So such order, you just executed what we call instant order or market order. That's what you just did. In Forex, we call it instant. You just entered the market. You just bought the phone instantly. You did not say, let me wait for the price to reduce a little before I pay. You just paid. So that is what we call instant order in Forex. When you open your MT5 and after your analysis, you just click on buy. The moment you click on buy or sell, you have entered the market, and that is instant order or market execution. Now we have pending orders. There are 2 types of pending order. Remember, I told you we have 2 types of orders in Forex: instant order and pending orders. We've just discussed instant orders, which means buying at the best available price. Now we want to discuss pending orders. Now there are 2 types of pending orders. There are 2 types of pending orders in Forex. One, we have what we call limit orders, and then 2, stop orders. There are 2 types of pending orders: limit orders and stop orders. Now, under limit orders, we have 2 types of limit orders: buy limit and sell limit. And under stop orders, we have buy stop and sell stop. I hope this is clear. Let me repeat this. We have pending orders. Under that pending order, we have 2 types of pending orders: limit orders and stop orders. Then under stop orders, under limit orders, we have buy limit and sell limit. And under stop orders, we have buy stop and sell stop. So we are going to look at each of them so we can understand what each represents. Now let us talk about limit orders first. What is a limit order? A limit order is an order placed to either buy below the market or sell above the market at a specified price. A limit order is an order placed to either buy below the market or sell above the market at a specified price. It's like a U-turn. You place a buy below the price, hoping market will get that low before reversing. Don't worry, I will use a diagram to illustrate it. Now look at what we mean by limit order. If you look at this diagram here, the first one is buy limit. I told you we have two types of limit orders, buy limit and sell limit. If you take a look at this diagram here, the first one here is buy limit. Now, buy limit is order placed below price and price then goes up. You see this blue circle? This blue circle is where the order starts. Okay. Now, the green line is where you want to place your order. The market starts falling from this blue line. Then you now come down to this green line to place your buy limit. Because from your analysis, you believe that if market comes to this green line, it will reverse and start going up. So you want to catch that reversal movement. You want to catch that reversal move so that once it starts going up, you start making your profit. Okay. So what do? You come to this green line to place your order, buy limit. You can see that the order is placed below the current order. The current price is this blue circle. This blue circle is the current price. So you come to this green line to place your order, such that if this market continues going down from this blue circle now, then once it touches this green line where your order is, as it touches this green line and starts going up, then you are in profit. So buy limit simply means placing a buy order below the current market price with the hope that when the market gets to that your buy order, it will reverse and starts going up, and that gives you profit. I don't know if this explains it. I will still use a normal diagram to illustrate it. Okay, just try and follow. It's very simple to understand. Now let's talk about sell limit. For a sell limit, it's an order placed above price and price then goes down. Let me illustrate it. Let me just explain the diagram there. See, for a sell limit, market, you see that market is going up, market is buying, but you believe from your analysis that when this market gets to this red line, okay, this red line here, it will fall from that place, it will start coming down. So what do? You want to catch this sell, this fall, you want to catch it. So you go to this red line and place your sell limit. You place your sell limit. Okay, once this market continues going up and touches this red line here where your sell limit is, your sell limit order will open, with trigger, and if the market starts coming down, you start making profits. This buy limit and sell limit, they are there in your MT5. Okay, I will show you when we treat MT5. I will show you where to see this buy limit and sell limit. Okay, so let me I'll just repeat before I go to real chart to show you how it works on the chart. Buy limit simply means you open your chart and you see that market is going down, market is selling. But from your analysis, you believe that when this market gets to a certain level, it will change direction and starts going up. So you want to catch that reversal movement up. You want to catch that movement. So what do? You place a buy limit at that level where you believe that when market falls to, it will change direction. So the moment you place that your buy limit, then you leave it. If this market continues going down and gets to that level where your order is, your order will open. If it changes direction, you start making profit. Okay. So, but for a sell limit is the opposite of buy limit. Sell limit is that you open and see that the market is going up, market is buying. But you believe that when this market gets to a certain level, it will start falling from that point. So what do? You go to that level, okay, and place your sell limit. So if this market continues going up and gets to that level, your order will open. If the market changes direction and starts coming down, you start making profit. Now let me take you to a live chart so that you understand what I'm trying to explain. Let me take you to let me see if I can use this now too. Now take a look at this chart. Take a look at this chart. This is AUD USD chart. Okay, you can see where the price is at the moment. Price is here. Price is here at the moment. This is current price here. Here, you can see by the, if you look to the right, you will see the price there is 0.66792. That is the price of this AUD USD currently. So now let's assume you have opened your chart like this, and after you have done your analysis, you believe that this market is going to change direction when it falls to this level. Let's assume when it comes to this level here, let's assume that this market, you believe that this market, currently the market is there currently, but you believe that this market is going to change direction when it comes to this point. Can you see this point here? Here. Here. You believe that this market is going to change direction once it gets to this point here. You see this point here? From your analysis, you believe that this market is going to keep falling down, but once it gets to this level, it will change direction at that level and starts going up. So what do? You can place a buy limit here. You can place a buy limit at this point, so that when this market continues falling, once it gets to this place here, your buy limit will open. And if it changes direction, actually, you start making profits. If it comes to this point now and starts going up, you start making profit, because what you placed is what? Buy limit. Okay, so a buy limit is actually an order that you place it below current market price, with the intention that market will get to that place and change direction and starts buying. So you want to cut that buy move. That is how to place a buy limit. Now let's talk about sell limit. Sell limit is the opposite of buy limit. For a sell limit, we need to get a market that is on the buy, market that is moving upwards. When market is buying, let me see if I can get such markets. Let's see. Let me see if I can get GBP AUD. GBP AUD was buying yesterday. We made some money from this. Okay, so all right. Now this is GBP AUD. This is GBP AUD. We made some money from this market yesterday because we bought it at this. We bought this market at this level here. We bought this market at this level. We made some profits. Now, watch. You see this market here. Let's assume from your analysis you believe that this market is going to change direction, is going to continue buying. But when it gets to this point, you believe that when this market gets to this point, when it gets to this point, you believe that when this market gets to this point, you see this point here, here, you believe that when this market gets to this point, it will fall, it will start selling. First of all, the market is buying. The market is buying, but from your analysis, you believe that when this market buys and gets to this level here, where I just painted, it will start selling. So what do? You come to this point here and place your sell limit. You come to this point here where I just brushed and put your sell limit. So your sell limit now will be here. So if this market continues going up, if it continues going up, if this market continues going up from currently, market is there currently, if it continues going up like this and gets to this point here, sorry, and gets to this point, yeah, sell limit order will open. If it starts falling from there like this, you're making profits. You understand? So sell limits, you place sell limits you know, above market that is buying, with the intention that when the market gets to that level, it will pick it. And if it changes direction and starts falling, you start making money. So that is just the difference between buy limit and sell limit. For a buy limit goes with a market that is selling market. Buy limit goes with a selling market. You open your chart and you see that market is selling, is coming down. You place your buy limit down so that when market keeps falling and gets to that low level where your order is, it will pick your order. If it changes direction and starts going up, you start making money. But for a sell limit is the opposite. Sell limit is for a buying market that is buying. You place your sell limit above it so that when that market continues going up and gets to where your sell limit is, it will pick your order. If that market changes direction and starts coming down, you start making money. So that is the difference between sell limit and buy limit. Okay, so I will, when we treat MT5, you will see how to place buy limit and sell limit on your MT5. All these things are right there, on your MT5. Okay, so we have been able to explain buy limits and sell limits. Okay, of course, you know that these buy limit and sell limit are the two types of limit orders. I told you we have pending order, we have under pending order, we have limit order and stop order. So we have talked about buy limit and sell limit, which are the two types of limit orders. Now let's talk about stop orders. We have two types of stop orders. We have buy stop and sell stop. Now this is step order. A stop entry order is an order placed to buy above the market or sell below the market at a certain price. This one is just straightforward. See, for a buy stop simply means order placed above price and price keeps going up. See, look at this blue circle is where the order starts, where the market starts from. But from your analysis, you believe that this market will continue going up. So you just place your buy stop in front of this order. So as the market is going up, market will just pick your order and continue going up and you're making profit. Very simple. Opposite of this is a sell stop. For a sell stop, market is falling. You see that when you open your chart, after your analysis, you believe that this market will continue going down. So you just come in front of the market, and place your sell stop so that as the market continues going down, it will just pick your order and keeps going down. You're making money. For instance, you can see the blue circle is here. The red line is where you place your sell stop. Market now keeps coming down, breaks the red line there and continues going down. You're making money. So that is just the difference between a buy stop and a sell stop. So let me go to the chart again to illustrate that. Good. Now, look at this market. Let's assume as this market is in a little retracement. You understand what I mean by retracement as you grow. Now, you see how this market, let's assume that after analysis now you believe that this market will continue selling. This market is coming down at the moment, but it's retracement, just a short move, right? You believe that this market will continue selling. What do? If you want to catch this, you just come in front. You just come in front of this market and place. You just come in front of this market somewhere here, and place your sell stop. You just come here and place your sell stop in front of this market here. Can you see that? So if this market continues coming down now, it will just, from here now, if it continues coming down, it will just pick your order and keeps going down and you're making profits. That is sell stop. That is what sell stop. How to place sell stop. you place it in front of a selling market. So as the market keeps selling, it will just pick your order and continues going down, and you're making profits. Now, for a buy stop, which is the opposite of that, buy stop is just market that is buying, you place it in front of the market. It's very simple to understand. Now let's say, for instance, let's assume that this market is let's assume that you open this. Let me see if I can get, hold on, let me see if I can get market that is actually buying. Just there. Okay, good. Let me use this. Here, on this daily time frame, this market is buying here. Let's assume you believe that this market will continue going up. From your analysis, you just come and place your buy stop in front of the market. So as the market continues going up, it will pick your order and you're in profit. It's as simple as that. Let me pick my brush again. You see where the market, you just come in front of this market, let's say somewhere here now, and place your, are you seeing it? Just place your buy stop there. So if this market continues going up, look at where the market is at the moment. If it continues going up now, you are making profit and profit. So that is buy stop. That is buy stop. How to understand buy stop and sell stop. So it's as simple as that. Very, very simple. You will get the practical experience when we treat MT5, how to place all these orders. So let's just do a recap of the order types. Of course, we said we started from here. We said we have two types of market orders: market execution and pending orders. Instant order or market execution simply means you buy at the available price, current price of the market, you enter the market. And under pending orders, we said we have two types of pending orders, right? We have limit orders and what? Stop orders. Now, under limit orders, we have buy limit and sell limits. Then under stop orders, we have buy stop and sell stop. It's as simple as that. Pending orders, we have two types: limit orders, stop orders. Limit orders, we have two types of limit orders: buy limit, sell limit. Then under stop order, we have buy stop and sell stop. Very, very simple. You can see it here. Limit orders, we have two types of limit orders: buy limit, sell limit. Stop orders, we have two types of stop orders: buy stop, sell stop. Of course. Then for limit orders, we say buy a limit order for a buy limit. And for a buy limit, we have a order. You place the order below current market price, and if market touches that place and reverses, start going up, you start making money. While for a sell limit, you look at a market that is going up, then you place your sell limit above it. So if this market continues going up and gets to where your order is, it will pick your order, and if it starts coming down, you start making money. All right. Then for a stop order, we have buy stop and sell stop. Of course, buy stop simply means you place your buy in front of a market that is going up. If this market continues going up, you are making profit. Then for a sell stop, you place your order, below market that is coming down. If this market continues falling, it will pick your order and it starts giving you money. So that is just how to understand buy stop and sell stop. So these are the four types of pending orders. The four types of pending orders. Okay, buy stop and sell stop are the stop orders. Buy limit and sell limit are the limit orders. Okay, I think I will need to stop this. Let's stop here today. Our next class will continue from stop loss.